With the Phase 1 trade agreement signing between the US and China supposedly occurring this week, I thought it was time to go back and look at net farm income here in the US. And thanks to a friend of the show, Jeffrey Landsberg of Commodore Research, who sent me some of this research a month ago, I've been keeping tabs on stories about net farm income, total net farm income for the US, which, by the way, it ended up being at a 6-year high in 2019. So it had not been this high since 2013. But the real picture about net farm income and how the farmers are doing, and distortions and subsidies and problems with agriculture and farming, is way more complicated than just that there was very high net farm income. And in fact, a lot of that net farm income was thanks to bailouts and subsidies and other distortions that the U.S. government and President Trump and many of the predecessors and the U.S. Department, many of the former presidents and predecessors have given subsidies to farmers, whether it's corn ethanol or sugar subsidies, which go back around over 100 years. And then also the U.S. Department of Agriculture and the Food and Drug Administration. Just the distortions that are in the farming and agriculture sector now are enormous. The distortions are so large, and consumer preferences can change with demand for types of food, that just in the last month or two, we have two very large bankruptcies. The two largest milk processors here in the U.S. are Borden and Dean Foods, and they've both been bankrupt. Now, consumer preferences have changed. People are having less dairy, less milk. People are also switching to vegan milk or almond milk. But these firms had so much debt, and they were not allowed to pass on higher prices in certain instances, especially dairy farmers, not allowed to raise prices to the consumer. And that's causing a massive wave of bankruptcies in farming. So I'll talk about that in a little bit. But first, let me play a clip for you guys about the total U.S. net farm income. That was from an agricultural news, a news network that was in the Farm Belt.
But compared to 2013, there was a peak in farm income. There's still been a long downtrend since then. It's now down about...
Actually, let me go back and...
Welcome, I'm David Geiger. The USDA says net farm income went up in 2019 compared to 2018, settling at $112 billion. But compared to 2013, there was a peak in farm income. There's still been a long downtrend since then. It's now down about 44%. But counting for inflation, 2019 was still below the 20-year average of farmer income. Veronica Nye with the American Farm Bureau says net farm income is more nuanced than the charts show. The number includes government payments and insurance. When you take those out, farm receipts are still down 2 to 3% from the year before.
So there's a lot sort of nestled in that net farm income number that when we pull it out, that maybe the farm economy and what's going on in the ground doesn't quite match an upward trend that we would see out of that Highline USDA number.
One positive side of the market is land values are holding strong. Nye says they are typically held up by good interest rates and cash receipts, or how much you can sell the land for. And with people looking for other investment areas, farmers can rely on the finite land amount to keep values steady.
Of all the things, and you look at farm income and how farmers are doing with these significant declines in prices, it really is the solid asset value that's hanging in there that's, I think, keeping a lot of farmers from panicking at this point.
The Phase 1 trade agreement between China and the U.S. has the two nations in close contact as they move towards a signing on January 15th. U.S. Chief Ag Negotiator Greg Dowd says the agreement means big numbers of Chinese agricultural purchases of U.S. ag commodities. He told Farm Journal that China has already bought $24 billion worth in 2017. They'll buy another $32 billion over the next 2 years. China is also loosening restrictions on importing GMO crops. Its governing body has approved safety certificates to 203 new genetically modified crops for planting and import purposes. Documents this week could pave the way for more GMO adoption in China. The Chinese Ministry of Agriculture shared lists that include soybeans, corn, cotton. The new approved certificates will be valid between 3 and 5 years from now, depending on the crop.
Okay, and that clip of about 2 minutes and 25 seconds, give or take, is from an Iowa agribusiness report. So very interesting stuff. It's a complicated picture. So Jeffrey Landsberg, again, shout out to him for bringing this to my attention about a month ago, sending me a report. So total net farm income is doing very well here in the U.S., but it's a lot more complicated, a lot more distortions than just that. Not every farmer is doing well. So let me read some opinions from more of my Wall Street for Main Street listeners that I asked about this. One of them is from Texas. He works in the has family in the agriculture business and has worked there in the past. Quote, the biggest issue with agricultural profitability is that the regulations make it so that the producer doesn't make enough money. Just look at the beef market for a prime example. The producers are getting paid around $1 a pound for cattle on the hoof. Do the math that it's not going to work. So the consumer is paying more for steak and beef and other things like that, especially higher quality grass-fed beef and things like that. But the farmers are not directly benefiting from this, so they're not getting the benefit of the price increases in a lot of cases. This is from that's from Michael Bonke, who I think lived in Argentina and then also immigrated here to the U.S. So he was witness to Argentina's financial collapse, and he's an American citizen now. And then this one's from Brian Oxner, who's a podcast listener and an entrepreneur, and he sent me his opinions on China's agriculture purchases. So USDA said in 2017 that farmers make an average of about 15% of the retail food dollar. For every dollar you spend at the grocery store, the farmer's cut is only 15%. Inflation is the big reason for rising food prices. It's not commodity prices going up. There isn't much that can be done to help American wheat or corn farmers. China already produces plenty of both crops and doesn't import that much. Soybean farmers desperately need China to buy enough bushels, or they will be in a world of hurt for years to come. Also, China doesn't need much, if any, wheat or corn. China isn't in the top 100 importing nations for corn, and it's only number 30 for wheat. China is still number 1 for soybeans, but they're buying more from Brazil, which I predicted about 5 or 6 months ago if you go back and listen on the archives. And also I predicted that they would buy more meat from Brazil and pork from Brazil. And they want to be China wants to be grain self-sufficient by 2035. He sent me an article about that. I'll try to put it in the information and description section if you want to take a look at that. So U.S. farm income is at a 6-year high. It's very significant as U.S. farmers are not faring nearly, I would say some U.S. farmers are not faring nearly as poorly as many pundits and media outlets continue to state. It's a lot more complicated than just saying that net farm income is at 6-year highs, because clearly there's a lot of farmers, especially smaller family farmers, that are not benefiting from this. And there's so many government distortions, whether it's sugar subsidies, which have been going on way too long and not gotten dropped, or the government's different federal government tax subsidies or bailouts or state level stuff is picking winners and losers in farmers. A lot of the smaller farmers are not really benefiting from this. There's a very interesting Forbes article that came out at the end of December by Eric Sherman, E-R-I-K Sherman, and I'll put it in the information and description section. I'll read you some of it now. So his article is titled, "Here's the Crushing Truth About American Farmers Under Trump's Trade War. Income inequality comes in many forms, a long developing one getting unfortunate boost between trade wars and cataclysmic weather events is agriculture, the small farmer to be exact. They were already doing badly, and then came the tariff wars with China and the loss of a major market. There's been Trump's Market Facilitation Program, or MFP, which is a bailout for farmers, but according to an analysis, the biggest FAR organizations sucked up the bulk of the money, putting small farmers ever further behind. To get an idea of the relative size of most farms, he put a table there, and there's a lot of farms that are under 50,000 in gross income percentage. So percentage of all farms, that's almost 76%, 75.6. And 3/4 of all farms in the U.S. bring in less than $50,000 in gross revenue, while 11.7% see at least $250,000. But those numbers are misleading because they are gross before all costs and are for family farms, not non-family. Majority of the farm is owned by people other than those operating it. Farms measure profitability by operating profit margin, net income after cost divided by gross income. They get in trouble when operating profit margin falls under the critical 10% level. When the owners don't have outside income that helps underwrite the cost, then 76.2% of low sales farms less than $150,000 a year have below critical operating profit margin, according to the USDA. From $150,000 to $349,999 gross income, 55.8% are below critical margins, and so it goes until you reach very large farms, 5 million or more, where only 24.6% are below critical. So the large farms are doing well. In other words, small family farms, about 90% of all family farms, are in deep trouble. Normally, these latest shocks are helping to drive up farm bankruptcies and farmer suicides, as Chuck Jones wrote earlier this year in another Forbes article. These are people who badly need help, but they aren't getting it. In fact, relatively few are receiving the help they reportedly need. In Louisiana, the program doesn't cover costs, let alone the income. Had there been no trade war, the point of the farm subsidies that Trump put in, which are in addition to other regular types. So the distortions are not helping the people that they're intended to help. So this is more unintended consequences, more government distortions at all levels, at the federal, state, and local levels, with subsidies and bailouts and things like that. More than a third of 2019 farm income is coming from the federal government. There's an article there with the research, but that's an aggregate, not evenly spread out. The Environmental Working Group has run an analysis on these farm subsidies and says the top 10% of the recipients, the largest, most profitable industrial-scale farms in the country, according to the report, received half of all the dollars spent in the bailout in the form of multi-million-dollar payments. The top 1% of recipients received 13% of the farm bailout payments Trump gave out. The bottom 80% of the farmers that received bailout money from Trump's farming bailout program only received an average of $5,136. So it talks about how farms are dying off and the record debt levels. There's a number of different articles I have on this. I think I have, let me count here. I have 1, 2, 3. I have 3 other articles, so 4 articles if you want to go in depth on this. But it's a very serious issue. There's record debt levels for a lot of farms. Now, not all farmers are doing bad. Some of them are doing very, very well, but it seems the smaller farmers are the ones that are doing the worst. Tom Lee says price control on food doesn't allow prices to go up to keep pace with business expenses too. Otherwise, the bottom 10% of people would starve. Yeah, so this is government price and wage controls, and the government has been mucking about in the price controls for agriculture for over 100 years. Whether it was sugar subsidies or FDR during the Great Depression in 1929, putting in massive amounts of price controls. He did not want prices to fall. So farmers were being paid to grow crops and let them die, or not grow crops at all, to maintain prices from dropping. No deflation. Muddy River Dog says he lives near John Deere's hometown and that the farmers there are doing well. Well, the data and the articles and the people who actually spent hours and hours doing this research suggest that it's more complicated than what you're saying. When government starts picking winners and losers and doing bailouts, this is the Cantillon effect, that people closest to the bailouts or know the right lobbyist or know the right congressman who's on the right committee or subcommittee, or they're friends with the people at Monsanto, or they're friends with the people at Tyson Foods, because the people who are Monsanto and Tyson Foods are also, and some of the other larger food companies are also creating massive problems. Durf says over 800 dairy farms in Wisconsin closed in 2019 alone. Yes. Yeah, dairy farming in particular was extremely unprofitable, and this is reflected in the bankruptcies recently of Dean Foods and Borden. And I have articles on those if you want to go more in depth. Meanwhile, the U.S. consumer is getting killed with stagflation and taxes, and most farmers are not benefiting from the higher food costs that the consumer is paying at the grocery store and the restaurant. The problem with Dean Foods also, someone said it was Mitt Romney and private equity. The other problem is these companies loaded their balance sheets, Dean Foods and Borden, with debt And when you have that much debt and your profit margins are not very large and your revenues drop and your income falls and you're still stuck with the debt, you don't have flexibility. So like I said earlier in the show, with milk and demand for regular milk is down a lot. A lot of people are lactose intolerant. A lot of people are switching to almond milk or vegan milk. A lot of people like me are not having as much dairy at all. They're not drinking milk. So demand is falling for certain regular milk products. It's not increasing, and the debt level is still there. And when you have that much debt and your profit margins are thin, or they're thin to begin with, and then they start to decline, then you're in trouble because you already have too much debt and you can't be flexible. So these firms like, this is a case study, just my opinion, these firms like Dean Foods and Borden, they can't go out and buy an almond milk company. They can't make investments into vegan milk companies. They don't have the flexibility in time to do this because of the debt on their balance sheet. Rob says a rich farmer is as much an oxymoron as military intelligence. Well, Rob, clearly, U.S. net farm income is up a lot. Now, that's also counting the bailouts that Trump gave out. President Trump and the U.S. Department of Agriculture and the Food and Drug Administration and the farm subsidies at the state level and the local level that were given out. So there was a massive amount of bailout money and subsidies given out to farmers, record amounts in 2019. The Chinese also own Smithfield Foods. I don't know about Wilson. They own Smithfield, the pork producer. But I'm not sure how the tariffs on pork affected that. I haven't seen any good articles talking about that. So there's so many government distortions, and it's been going on in agriculture for probably longer than any other industry. Now, it's in other industries, but the farm subsidies and the sugar subsidies and the bailouts and things like that in agriculture have been going on longer in the U.S. than in pretty much any other industry. I have about 3 or 4 articles on the history of sugar subsidies if you want to read about it. The Mises Institute has been talking about the sugar subsidy for a very long time. Okay, let me read. Okay, here's one. With Trump's farm bailout came surprising profits but little help for the neediest. This is from the Washington Post from Andrew Van Dam and Laris Karklis from December 30th. In 2019, the Farm Belt felt about as hospitable as the asteroid belt. Record rainfall turned fields to sludge and made it nigh on impossible to plant corn and soybeans until long after the typical window had passed. President Trump's long-running trade war cut off farmers' access to China's enormous market. And across the farm sector, commodity prices remained in the doldrums, yet the Agriculture Department now estimates 2019 was farmers' most profitable in 5 years. It's actually 6 years, but this article's wrong on that. What happened? 3 words: market facilitation program, or as it's more commonly known, the farm bailout. Without government assistance, U.S. farm income would have fallen about $5 billion from its already low 2018 level. So the $14.5 billion in bailout funding announced so far represents a substantial reversal of fortune. About 3/4 of the funding already has been distributed. If you look at the prices, the weather, and the trade imbalances, you'd expect the farm sector to be in a terrible spot, and it's not. The numbers say otherwise. The total net farm income, that's because it's at a 6-year high. That's the sector overall. However, the total income earned by all 2 million farms and ranches in the United States, the top line obscures profound differences. Most farmers benefited from the bailout. This expert that was interviewed, Montana State University economist Eric Belasco, said, bailout money, but because bailout money is distributed based on acreage and not farmers' need, about half of the money, 47%, went to the largest 10% of farming operations. The numbers come from an analysis by Belasco and his colleague Vincent Smith. Both men are also affiliated with American Enterprise Institute. The disparity, that's funny that that I guess Washington Post points out anyone who doesn't agree with their politics. The disparity runs too deep to be solved by government bailout, Belasco said. According to 2018 data, more than 70% of farm households had a high level of financial risk in 2018, but of those that qualify as very large, median income above $756,000, only 25% fit into that same category. The philosophical question, should we have trade aid for farmers who are at a low risk of losing their farm? Belasco asked, most other safety net programs are income adjusted. Farm policy doesn't do that at all. So again, more distortions, more misallocation of capital, more unintended consequences, not helping the smaller farmers that probably the program was intended for. Indeed, the past 2 years, supposedly intended for. Indeed, the past 2 years have been marked by a sharp rise in bankruptcies in the nation's deepest farm country. A quarter of the nation's farms sit in super agriculture dependent areas, places where more than 1 in 7 people live on farms. Among them, the rate of farm-specific bankruptcies, Chapter 12, has more than tripled since 2015. But farms' stress doesn't just show up in family farm bankruptcies. Some farmers don't meet the requirements for Chapter 12, and many others in farm country depend on farms for their livelihood, even if they don't grow much themselves. Across the board, whether it's the liquidation of Chapter 7 or the restructuring of Chapters 11 and 13, bankruptcies in these farming-dependent areas are rising faster than in the rest of the nation. Quote, farmers as a whole keep expecting their farm income to be better than what it turns out to be, said Robert Dinterman, an agricultural economist at Ohio State University who constructed the farm bankruptcy database we analyzed for the story. So he added, each year farmers are digging themselves in a larger and larger hole. They're accumulating more debt than they're able to pay off. Quote, I don't think there's any reason to think there's going to be any relief in the future, Dinterman said. Only a dramatic new round of government payments or an emphatic resolution to Trump's ongoing trade wars could change the industry's trajectory, he has said. Overall, the growth in farm debts has outstripped farmers' stagnant equity stakes, leaving them at higher risk of insolvency than they have seen at any point since the end of the Great Recession. It's compounded by an unwelcome mix of lackluster prices for corn and soybeans on the open market and low yields caused by extreme weather. Quote, I've never met anyone that could think of a worse time for planting conditions, said Todd Holtman, a market analyst with data firm DTN and a regular on the farm show circuit. In the modern era, this has been by far the worst planting season for corn and soybeans. It usually takes more than one bad year to get farmers to declare bankruptcies, said Carrie Litkowski, who leads the USDA team, U.S. Department of Agriculture team that estimates farm income. She added that it seems like a lot of farmers might be saying every year, I'll just hold out for one more year. They're just hoping for a turnaround. Ohio State University Farm Income Enhancement Chair said the shift in income sources may surprise farmers. Farmers are getting a little bit less from cash receipts and a little bit more from government payments. Even with help from the federal government, U.S. farm profits are only 2/3 of the inflation-adjusted $136.6 billion farmers pocketed in 2013, the best year in recent memory. So this year's total is almost directly in line with the average profit since 2000 adjusted for inflation. The bailout alone can't make up for the collective hammering farmers took from 4 straight subpar years. So I think it's clear that all farmers have not benefited from the bailouts. Money River says 2019 was a bad year for corn and soybeans in the U.S. due to weather conditions. They get paid anyway by the taxpayer. Well, I am against that. As an Austrian school economist, I am against government subsidies, government bailouts, and all these things. They create distortions. They pick winners and losers. They misallocate capital. Overall, it makes things a lot worse. And there's no competition then if there's a farmer that knows a lobbyist who's getting all this bailout money or is getting some type of extra subsidy or a couple subsidies. Just makes things worse. And it also hurts the consumer too, because prices are going up for the consumer. The U.S. consumer is getting less food, less high quality food, and less food total in general and portion size with shrinkflation for more dollars. Santana says it was corporate farms that got bailed out and larger family farms. How do you profit when phase 1 phase 0.25 trade deal doesn't pass? Asked Finance Freak. Well, in my opinion, China is going to keep buying from Brazil. They have to buy food. So meat, pork, beef, chicken, soybeans from Brazil. So Brazilian agricultural producers, I talked about this in a show about 6 months ago. So you have JBA Meats, I think it's JBA Meats out of Brazil. That stock is already up a lot in the last like 8 or 9 months. It's up a lot. You have Bunge, which is, they own a lot of acreage in Brazil and Argentina for soybeans. So China really has to import a lot of soybeans, but they don't have to import them from the US. From what it sounds like, from what Brian Oxner told me about his research and some of the other articles I've been reading. If the trade deal does not go through, I think this will hurt China's ability probably to buy as many base metals. Because they will not, if China doesn't get tariff relief, they're not going to be able to accumulate as many dollars. If China gets tariff relief and there's a better trade deal with the US, then China can earn more dollars, and they can recycle those dollars not into US treasuries, but into copper and iron ore and base metals. The Chinese stock market is already down considerably, though, in the last couple years. So if the trade deal doesn't go through, China's caused a rally in copper and base metals, some base metals. But they may, if they don't get tariff relief, then they won't be able to earn more dollars to recycle those into other commodities. That would be my educated guess. Again, just my opinion. Muddy River Dogs, who lives in farm country, says huge subsidies are paid out to grain farmers. They're also state tax exempt. Again, I'm anti-subsidy, anti-bailout. Just causes more distortions. It picks winners and losers. I'm anti-lobbying. Look, I've lived here in the Washington, D.C. metro area since the year 2000. So I know I've met lobbyists. My parents knew the head lobbyist for General Motors, so I've heard stories. I've been in her house. Not sure if she's still there, but she worked there a long time. Not sure if she's still working for General Motors, but I've been in her house before. So I've heard stories about from people who've worked for lobbyists, from people who intern for lobbyists. There's so much government corruption here in the DC metro area from lobbyists. I mean, there's government corruption everywhere, though. It's more open here in the US because lobbying is legal. There's foreign governments that lobby here in the US. That's nuts. A lot of people aren't aware of that, how much special interests like foreign governments, like Saudi Arabia, Qatar, Israel, China, how much power those nations have in lobbying. A lot. I mean, China's gotten away with so much in the last 20 years. China owned politicians in both political parties. That's why they're able to get away with all this stuff for 20 years here in the US. They had bought so much damn influence in both political parties. So China's just upset now that the US, over the last couple of years, the US is starting to wake up to what's been happening for 20 years. But it's been going on for a long time. Rob can't believe that Borden went bankrupt. I'm not surprised because consumer preferences have changed, and the more important thing is their margins are declining and they have too much debt. And then they can't adapt to changing consumer preferences and changing market conditions, so they can't go out and diversify their milk exposure into almond milk or vegan milk or protein shakes or whatever. I like these new cold brew coffees that have no sugar in them, that have like 10 grams of protein. This is not a plug. They're not an advertiser. I like Keto Super Coffee. Those are really good in the morning. There's no sugar in there. It's monk fruit, 10 grams of protein, MCT oil, and cold brew coffee. I like those. So they can't go on and buy like one of those companies. So the milk companies, because they have too much debt and they don't have good free cash flow, they have razor thin margins, and then those are in jeopardy. They can't go out and change and adapt to changing consumer preferences. Because a lot of the personal trainers and nutritionists that are recommending paleo and keto, they're telling people who are on paleo or keto diets to avoid dairy, especially milk. Dave says it sounds like some farmers are doing great and some are doing horrible. Dave, all these subsidies, farming subsidies and farming bailouts have caused enormous distortions. So if you want to read about all the details of the distortions, the articles will be in the information and description section. But the federal government has been mucking about, picking winners and losers and causing distortions. The sugar subsidy has been in effect here in the U.S. for over 100 years. There should not be a sugar subsidy anymore. Okay, the sugar subsidy, because American soda manufacturers and candy manufacturers had to pay a much higher sugar price here in the U.S. They didn't want to pay it. So they had their food chemists come up with high fructose corn syrup, which is supposedly a lot worse than regular refined cane sugar, which is also toxic. So if refined sugar is bad and considered toxic now in the health research, what does that mean that high fructose corn syrup is? It's even more toxic. So the sugar subsidy has caused the creation of high fructose corn syrup, and then also people are paying a higher price for sugar than they should. And that's been going on for 100 years. There's no need whatsoever for a sugar subsidy to remain for billions of dollars per year. The estimates, there's articles here that the sugar subsidy is still, like, consumers are paying like about $3 billion extra per year. Almost $3 billion per year for many, many years, the sugar subsidy. So it's an extra subsidy to the sugarcane farmers. Rob says big sugar is ruining Florida. Huge fertilizer outflows into Lake Okeechobee, causing algal blooms all along the Gulf Coast. Yeah, there's an article about this that Lou Rockwell wrote. Mark Thornton from the Mises Institute, that was on Lou Rockwell in 2018, August 18th, 2018, how U.S. sugar subsidies bring a red tide of algae to Florida shores. Well, sugar in general is bad. Sugar, regular sugar, refined sugar in general is bad, and so is concentrated fruit juice. I learned that the hard way. I stay away from that stuff now, because I used to get smoothies, with the fresh vegetables and the kale and the spinach, but then I'd get the concentrated fruit juice in there, and it was just too much. So now that I've stopped taking that stuff for over a year now, I'm in way better shape. But yeah, high fructose corn syrup. So all the sugar subsidy led to the creation of high fructose corn syrup because the food companies did not want to pay a higher price for regular sugar. Oh, I don't drink orange juice anymore. I don't drink milk or orange juice. Okay, well, I think that's pretty much it for tonight. So the phase 1 trade deal, again, I don't think China's going to do what they say. They have a history now since they officially joined the World Trade Organization of not doing what they say, of lying, cheating, and stealing, and for 20 years they got away with it. Now, they may actually buy some agriculture, but they really need tariff relief, and then if they can get tariff relief, then they can run larger trade surpluses, and they can take those dollars, those increasing amounts of dollars, and they can recycle those into more commodities. Now, if they don't get tariff relief, then that's going to hurt their ability to buy more copper and more iron ore and some other base metals, in my opinion. But China still has to import a lot of soybeans and a lot of protein, especially with the African swine flu. And there's reports out there that up to... And I have a podcast listener who is in the food industry in mainland China. He lives part of the year there and part of the year in Australia. He was telling me that his boots on the ground, that up to 70% of the pork population in mainland China was dead. That he was looking at. And this was a few months ago. So China's going to have to import a lot of pork from Europe, a lot of pork from Brazil. So making sure that there's enough food for Chinese people that by importing it. Now they don't care about the quality. I broke a story with my top source in mainland China who was telling me that the food quality that was being imported with the panic with the African swine flu, the quality was nowhere near the levels that they should be. The Chinese government didn't inspect the quality of the meat that was being imported. A lot of pork in Russia now goes to China. Yeah, I'm not surprised. China was importing a lot of pork and other types of meat from Africa, and the quality was suspect. I think Zero Hedge ran a story about donkey meat that was sub-quality that was being imported from Africa to China. That was like over the summer. Oh, did you guys see that there was a paddlefish species that was around over 150 million years and now it's extinct? It was only in China, now it's the scientists just officially declared it extinct because it was overfished. Again, this is governments. This is tragedy of the commons and governments. Governments cause distortions like tragedy of the commons and subsidies and bailouts, and they cause a lot of unintended consequences and a lot of problems for the environment, for the economy, and for small business owners, because the smaller farmers, from the articles I read and the data, and you could check out the stories later in the information and description section, the smaller farmers here in the U.S. are not benefiting. Now, some of them are probably still going to vote for Trump because they think that Trump is doing the right thing by retaliating against China. So some of them a large amount of them, I gather, are still probably going to vote for Trump in 2020, but we'll see. Okay, well, that's it for tonight's show, and all the stories I talked about, as well as the 3 sugar subsidy stories, will be in the information and description section under the video. I want to thank my over 200 Patreon account contributors for allowing me to focus on content research and analysis like this. Again, hat tip to Jeffrey Landsberg at Commodore Research for alerting me to this about a month ago. And the couple other people, Michael Bonke and Brian Oxner, who submitted some written analysis about their experiences in the agriculture industry to me in the Wall Street for Main Street Facebook group on some of these articles that I talked about tonight, and also they'll be available in the information and description section. Also, thank you to my dozen or so monthly PayPal contributors. There's around a dozen. It might be a little bit more than that now. I got a couple more signed up, and hopefully hopefully Patreon will be over 300 in the next 12 months, and thank you to people who tip me once in a while. Remember, I also take cryptocurrencies. I take the top 6 cryptocurrencies if you want to throw me a tip. So Bitcoin, Litecoin, Ethereum, Bitcoin Cash, I take those as well. Okay, well, everyone have a great week. And remember, January 14th is coming. What all those gold industry newsletters are talking about, January 14th is coming. And I think it's going to go the same way as Shemitah and some of the other stuff, but we'll see. Some of the other crazy predictions like gold-backed yuan, gold-backed petro yuan, Shemitah. Got a lot of these other ridiculous. The dollar index doesn't look like it's even in a downtrend yet. I mean, it's back up above 97. I didn't look at it today before we were recording the show, but it was still pretty strongly rallied again above 97. So I don't know why people are running these January 14th collapse headlines, but we'll see if the Phase 1 trade agreement's actually agreed to, because the stories that are coming out of China don't seem, the ones I've seen at least in the last couple weeks or so, that while Trump is saying that the deal is going to get signed, the media in China is saying that China is in a wait-and-see approach and doesn't seem really intent on signing, is in no rush to sign anything at all. Not that the Chinese would adhere to any signed agreement anyways. Okay, everyone, bye for now.